Welcome to today's lecture about how to read price action. And I'm going to relate this into, or I'm going to add in addition to fundamental analysis. So this can be able to help you in being ahead in terms of market analysis and so on. Because at this rate, with the war going on with Israel, Iran, US, and you see Ukraine and Russia on the other hand, and we also have Palestine and the rest. So there's like World War III is kind of looming. This calls for some serious knowledge of market. So last week I remember talking about us being having this opposing P array. If you check the previous video about I did about price action, 100 price action, I talked about this opposing P array that I would love to see price displace above on if we were to continue higher for us to be. Actually, I was bullish, and that was what I was expecting, and these are my reasons for being bullish last week. We displaced below this gap here into the next one and respected this PD array right here. Then price consolidated in that PD array, respecting the consequent encroachment of that gap. Consequent encroachment for the new traders is just the midpoint of that gap. This is a fair value gap of mark right here. So after seeing this, I knew for sure we are targeting something up higher. And as you can see, Monday dropped lower, Tuesday pushed higher, manipulating Monday highs into the consequent encroachment. And when this happened, you see how Tuesday closed, respecting the consequent encroachment of the bearish gap. So down here, price is respecting the bullish consequent encroachment, and up there, price is respecting the bearish consequent encroachment. You see how funny this price action was. It wasn't really that good in real sense. So this is where now fundamentals comes in. So when you go to fundamentals, we take a look. For example, dollar is against the gold. I mean, gold is against dollar. So when dollar is going higher, gold is gonna go down. So when DXY, for example, DXY, the dollar index is going bullish, of course, gold is gonna go bearish. When the DXY, which is the dollar index, is going bearish, then gold is gonna go higher. So in this scenario, what makes the dollar index go bullish, or what makes the dollar go higher? For example, we're going to be looking at the basics. I'm not going to go into all of it because I have a video which is the designed. I think the core pillars of trading. I think that's the name of the video. If you guys will check it out, to take a look. For example, I do have a lot of videos about fundamental analysis, but just a little bit of it. Let's take a look at the interest rates. Right now, I think US have been withholding interest rates for quite some time. They haven't been really changed, and because they want investors to invest in their country. So when the interest rate is high, investors would want to invest in that country because they will be having high yield. Rather than when the interest rate is lower, then investors will look for other countries or other currencies to invest in so that can happen. So apparently, we do have a challenge because during this weekend there's this kernel in Iran that the homers or something, I've forgotten the name, whereby a lot of oil usually do pass, and some of the demands of the Iranian government is that people, they're going to allow countries to pass there, but the oil should be paid in Chinese currency. That is bad news for the dollar. So that simply means that when it is bad news for the dollar, simply is that gold is likely to go high. So we are really in a very tight spot. If I'm being honest with you guys, we are in a really, really tight spot. If we end up, because from what I'm seeing right now, we've kind of disrespected this PDA a little bit. There's a possibility of gold dropping. There's a possibility of that. As much as we have this PDA here, and we just created a new PDA. You see this one? There's a new PDA here. Let me mark it out. So you see, these geopolitical factors are really, really affecting how price is behaving and how price is moving. You see this one? We have a new P area right here. We have a new bearish one. So once you see price starting to create these bearish P areas, know that for sure we are likely to be going down. This is the first one, bearish one. It respected it. This is the second one. And this second one is actually a breakaway gap. Take a look at it. This is a breakaway gap, meaning that it is not even easy, not likely for price to come and close to this level. But yes, that can happen. It may just come and tap this level, then we drop. So yeah, that's going on, meaning that dollar is gaining strength apparently. For some reason, I don't know how Trump is doing it, but dollar is gaining strength. That simply means it is bad news for gold. So yeah, we were very bullish, and a lot of investors were thinking about buying gold. But you see, we need to read price action. What's happening here in conjunction with the fundamental analysis or fundamental aspect of it, with the geopolitical factors that's happening. If you take a look on this specific reversal that we're having, it happened from this specific level. I think I've talked about. I don't know if some people would call this an order block or something like that, but I don't really treat order blocks. I would assume, or I would treat this as a gap. I would treat this as a gap. Wicks are gaps here. I would treat this as a gap. And you see, price went in there, respected it completely. Then it dropped down, creating a new PD array. And now that PD array is being respected, and we have created a new PD array, a bearish one. And this bearish one has kind of disrespected this one, because if you take a close look, you see the body kind of closed this Friday, a little bit aggressive towards that bullish one, meaning that our next liquidity, we don't have any opposing PD array under this leg. And this, when price does this, this is kind of a very tricky situation, because meaning that it is likely to come and take all these lows. So yeah, I remember talking about, I would like to see this low here attached. I mean attacked. This low of 2nd February. But from the look of it, seems like it just seems like we are going to take this low. If you ask me, till where? I can't really be sure of that, but because we do still have some PD rates lying here, we might attack it until this level of 42.65 or 42.67 from that level. But that being said, I just wanted to give you guys heads up of what's happening with gold. I think we are bearish, and in case you are looking for trades last weekend, you did not, you're confused, you don't know what was happening. Let me show you a little bit of how you would have handled these markets. So, for example, on Monday 9th, we opened here. Let's see, yeah, Monday 9th. So on Monday, we opened here, and in terms of market structure, we had this, disrespect of this PD array, this bearish one after the opening, and we were still looking for possible buys after taking liquidity. We're taking liquidity over here. So okay, so we had this liquidity right here. Price are taking that liquidity over there, as you can see. Then we disrespected this gap. So this one was acting as a this was acting as an inversion gap. I remember talking about I would like to see some buys from this level. I know some people we were kind of stopped up a little bit, but yeah, because I did not give exactly where the stop loss is supposed to be, because that's also liquidity. So at the end of the day, I'm just here to guide, not really to give signals and so on. So price ended up using this as a inversion fair value gap, and we had a break of structure to the upside, and you see price came back in, tapped that entry. If your stop loss was just below this wick right here, that should have, or this low would have blocked, or down here would have worked, then targeting these highs, and you see it was delivered. So this is how we have crossed it. So alternatively, we were looking forward for price attacking this is the daily fair value gap marked on higher time frame, this one here. You see, we came in even Tuesday, and price kind of respected. So you see, price was really respecting this PD array right here, that consequent encroachment. And if you take a look closely on the other hand, we had a bearish gap right there, and that's where exactly price started, reversing from after attacking that that PD array. Okay, so Tuesday the same thing. We were very bullish coming in Tuesday. We had these gaps. For example, here we had new PD arrays being created bullish that was supporting the buys, and assuming that you bought from this level and put your stop loss down here or maybe down here, then you're targeting these. For example, I would have been targeting this gap to be filled. Unfortunately, it never did that, to be honest. But I would be taking some partials from these levels here, from that high, from that PD array. I'd be taking some partials from there. Then coming in on Wednesday, now gears had really switched, because you see, we had a gap to the upside. Okay, but that gap was disrespected and displaced completely. So this is an inversion here, and you see price went back in, tapped it, and then we started dropping. So the price action here was very whack. I did not like it at all, this one here, because I usually trade New York. I did not like this price action. It was very, very. I don't even know what to say about it. But even after this, I was still bullish actually, but I had precaution, like, because I did not like how price was, behaving around here. Here, I mean here. But given that we had really displaced and created this type of, new P array, I knew for sure something is likely going on. And for even retail concept traders, if you'd have drawn, for example, assume you're drawing a trend line, if you don't understand, ICT and the rest, just do a trend line like this. You see this is a breakout. So you enter, at the retest, then put your stop loss right there and target this low. It was delivered on Friday. You see that? So it all works regardless. And that was how you'd have. For Wednesday, it was no trade for sure. It was very dangerous, not unless you were trading Asian session. After seeing this, then you enter. Okay. Now, when it comes to Thursday, on Thursday we opened up here. Then we had this, huge displacement during the open. You see this one here. This huge displacement gave us a break of structure, as you can see, with a gap inside it. So meaning that if you're looking forward sales from this level, from this maybe for now Asian, yes, would have, got some entry, but you would have been stopped out because the stop loss is supposed to be above here. But for those who had put it up here, then this swing high, then valid. That was well delivered. So for us who comes during New York, our question would be: have we taken any liquidity? Where are we beginning, New York session? I'm using UTC plus 3. So assuming I'm beginning at 15 p.m., right? So I'm going to be looking at what has happened here. Yes, this is a break of structure. Somebody said this is a break of structure to the upside with a gap. Okay, perfect. But what happened after that? The next candle closed back in. The next candle closed back in. The third candle closed back in. The fourth one back in. This tells you that this market is not interested in going higher. Once you see these consecutive candles playing around there, this tells a story. And given the fact that we had a break of structure to the downside here, this break of structure was actually liquidity. This was liquidity was supposed to be grabbed from this level, but it displaced above it, which was not supposed to happen. But if it displays above it, we have to wait for the next candle to close back in. So we see if this next candle would have closed above this one, this candle here, then we'd be looking for buys to proceed and fill this bearish gap here. But unfortunately, because these candles ended up closing back in, this was a sign that this was just liquidity being taken from here, from this level, and now price used this week, if I can grade this week, price used this week to push lower, something like that. Then let's see what happened. Did we 0.5? How was it playing around 0.5? Yeah, 0.5 is right here. You see how it played around that 0.5? Um, okay, is this thing where it's supposed to be for sure? Not really. Put it correctly. Yeah, here's 0.5. Yeah, right there. You see how price was really respecting that 0.5 of that week. Here's the 0.5. I don't know that you guys can see my drawings or the markings of this measurement. You see that the 0.5, and here we go. Price was literally playing around that area before it dropped, and after that, here we dropped and dropped and dropped and dropped, and Friday did the same thing, and that's where we are right now. So we ended up creating a new PDRA right here, bearish one on Friday, and we also have another one here. So I'm expecting maybe just a little bit retracement to that PDRA, then we continue dropping. But from the look of things right now, gold is bullish, short-term bullish. I'm not saying it's gonna be going down forever and ever, no. But as for now, I think we're supposed to be looking for sells, not buys as of now, especially coming from next week, targeting this PD race here, this swing was here. Okay, so that's it for this lecture. I'll see you in the next one. In case of any question, just leave a comment and like, subscribe, and share. Cheers.